The EIDL loan terms and conditions are revealed, and you're going to be shocked because SBA wants to take collateral. This is a bombshell update from LALATE for Friday. Thanks for tuning in. As always, like and subscribe to this channel and drop your comments below, and we may feature them in Saturday's recording. But first, the news. And for the first time in a few days, LALATE won't be answering your questions from yesterday's EIDL loan story. We're going to save those and answer them on Saturday's recording because this will be a shocker to all of you. And you've been asking for it. You've been asking for us to go through the EIDL loan terms and conditions, and we've asked you not to sign the agreement until you watch this video. Well, here it is. So we won't be answering your EIDL loan questions from yesterday, from Thursday. Those we'll answer on Saturday. We have them saved. But let's get right to it, and I certainly want to thank Mr. Wang for sending over a copy of his EIDL loan agreement. So what I'm looking at is the actual loan authorization and agreement from U.S. Small Business Association. I haven't reviewed much of it, and so I'm doing this cold on camera. It starts with an indication of how much is going to be paid. In this case, he was paid an amount for his loan of more than $25,000. You need to take note of that because it's going to be a bombshell coming up in a few seconds. The fact that it's more than $25,000. Interest, we all know, 3.75. The payment terms, we all know. But let me jump right to collateral, which appears right into the document. It's right on the fourth term. And let me drop to the bottom of that provision to get out the easy stuff first. For loans of $25,000 or less, EIDL loans of $25,000 or less, SBA is not taking a security interest in any collateral. All right, you got that? So what about loans of $25,000 or more? Here comes a bombshell. They are. Some of you have been dropping comments in recent days, some of you, certainly contractors, that said when you got EIDL loans of sizable amounts, and sizable I mean at least more than $55,000 or $100,000, you said in the comments that SBA allegedly was trying to take your construction equipment that you use in your construction business as collateral for the EIDL loan. Well, here we go. These are the terms, and these aren't unique terms to the kind person who sent me the loan agreement. These are general boilerplate terms that apply to all EIDL loans. For loan amounts of greater than $25,000, borrower hereby grants to SBA a continued security interest into any and all collateral described as secure performance of any debts, liabilities, and obligations without limitation, collectively obligations. So there's collateral they're taking if your loan is more than $25,000 for EIDL. But let's look more at what they say. So the collateral includes the following property that the borrower now owns or shall acquire immediately upon creation thereafter. Any tangible or intangible personal property, including inventory, equipment, instruments, chattel paper, including electronic paper, documents, letters of credit, accounts, including health insurance receivables and credit card receivables, deposit accounts, commercial tort claims, general intangibles, including payments and software, and collateral such that may be defined by the UCC Commercial Code. The security interest borrower grants includes all accessories, attachments, parts, supplies, and replacements, and all products, proceeds, and collections related thereto. So there you go. You have been asking whether they're taking collateral, and they are. Whether they want to initially in the loan agreement, some of you have been saying things like, well, you got your loan approved instantly, you didn't have to submit any additional documents, but here are the terms and conditions. You know, we've been saying for recent days that don't look at what's on SBA's website, look at the loan agreement, and here it is. When you have a loan offer of $25,000 or more, you are signing a document, if you do or have, that gives them collateral based upon your business items. And so what does this include? I mean, it includes your equipment at your business, your actual equipment, your documents, your deposit accounts. And this is what we have been detailing, that we had warned you, but we weren't certain, but now we are, that when you get an EIDL loan, and you are, for example, this actually, let me back up. This actually came up in one of the questions. Someone was a service business, and they said, well, they can't take collateral. I said, absolutely can. They can take collateral with your chairs in your office and your computers and your software and your phones and your light equipment. It says exactly right there. Any equipment in the business. Your business does not have to be a service business or a goods business. Either or, both apply. It doesn't matter whether you have goods on site or services rendered, they can take collateral, and you're representing they shall be able to take collateral. Really shocking. So do you still want the EIDL loan? Well, we're only on page 1. Let's get to page 2 on this. So requirements relative collateral. Borrower will not sell or transfer any collateral described without prior written consent of SBA. Well, wow. So if you currently have collateral, which they deem collateral, which is really unclear what is collateral, but we certainly know it's personal property inside your business, and you sign an EIDL loan, I'm sorry to laugh here, but you signed an EIDL loan for 30 years, they're saying you can't get rid of the collateral while you had the loan for 30 years. So better keep it, or get rid of the loan, or don't sign up for the loan. So use of loan proceeds. So this was also a big question. You've also talked about what can you use the loan amount money for. This is what it says. Borrower will be able to use the proceeds of the loans as working capital to alleviate economic injury occurring in the month of January 31st, continuing thereafter. And a third-party UCC handling fee, $100, will be deducted from that. So basically, you can use it to alleviate injury that you suffered in January of this year, 31st of this year, not anything before that. So take note of that. Requirements of the loan process, proceeds, and receipts. Okay, here it gets worse. Yes, I'm only on page 1.5. Borrower will obtain and itemize receipts and contracts for all loan funds spent and retain these receipts from 3 dates of the final disbursements. Prior to each disbursement, subsequent disbursement, and whenever requested by SBA, borrower will submit to SBA such itemization together with copies of the receipts. So it's not like it's a loan and you don't hear from SBA for the next 30 years. You have to keep track of a lot of documents, and you got to submit documents, and you have to have them around if they ask for the documents. Borrower will not be able to use in the proceeds of the loan to relocate without permission of SBA. Did you hear what I just heard? And I'm reading this cold. Borrower will not be able to use any of the proceeds of the loan to relocate without prior written permission of the SBA. You are prohibited from using the proceeds of the loan for relocation that's voluntary. And then prior to relocation, you must submit a description and address and to seek a determination whether the relocation was voluntary or not. Wow. You want to move your business? And SBA thinks you're using their loan money to move your business? Good luck. Wow. The borrower will make a request for a loan increase for additional damage as soon as possible after the need of the loan increases. SBA will not consider a request for a loan increase received more than 2 years after loan approval. Well, this is a good one. We've indicated to you that you can call up SBA and request to increase the loan when written. That here it says you can actually get it raised within 2 years after you receive the loan. Deadline for returning closing documents. So this is what another question you've all asked. How long do you have to sign the loan documents? It's sort of funny. This is in the loan agreement, which you would have had to sign, but it's sort of contradictory. So you have 2 months to return the closing document. You basically have 2 months to sign this agreement. Compensation for other sources. Now there is a part, and I'm only on page. I'm only on the okay. I'm only going on to the next page, page 3, and this is where it really gets bad. I mean, I've already used the word bombshell twice, and I'm going to use it again because the bombshells will just keep on coming. Duties to maintain hazard insurance. Did you see that coming? Did you see that coming? That you have to have a certain type of insurance for SBA for having an EIDL loan? Whoever talked about that? Did I ever talk about that? I didn't know this. I didn't know this until I saw this loan agreement. Did you know this? Did you sign the loan agreement and read through it and see that? Or are you hearing this for the first time now? Within 12 months of the date of the loan being signed, basically, you need to get hazard insurance policy, which includes fire, light, and extended coverage for all items to secure this loan to at least 80% of the insurable value. Borrower will not cancel such coverage and maintain the coverage through the entire term of the loan, may not be eligible for future disaster relief if the insurance is not maintained. Please submit proof of insurance to USBA, a Small Business Association, SBA. Wow. So you have to, as soon as you get an EIDL loan, you're required to get a certain type of insurance. And the insurance must provide for hazard insurance, and it must cover fire and lightning, and it must be based upon 80% of your equipment value. So you can't have an undervalued insurance policy. Let's say your equipment is $100,000, you only get $5,000 of insurance. No. You have to get it to insure the 80% of the value of your business property. You have to submit a copy of the agreement to SBA, and if you don't, you're in trouble. And you got to do this within 12 months. Did you see that coming? And you have to keep the loan. You have to keep that insurance policy for 30 years if you're keeping the loan for 30 years. So are you still keeping this? We are 11 minutes of this video. Are you still keeping the loan? You can turn back the loan at any time and not suffer interest penalties or early payment penalties. But if at 11 minutes into this video and you're wondering whether you should have had this loan in the first place, here we go. What's disconcerting, and I'm going to jump to it right now, is a lot of you have EIDL loans for $1,000. It's insane. You have to have a loan for $1,000. You have to have thousands of dollars of business insurance policies per year for 30 years. So basically, you have to spend, $30,000 over the next 30 years for insurance to insure a $1,000 loan. Now let me correct myself. That's only in the case of if they're collateralizing your loan. So it's actually not in the case of a $1,000 loan. It's really what I'm talking about here is when you're collateralizing. Well, no, let me take that back. No. I am correct. That first page I talked about collateralization, where you have to have collateralization if it's a $25,000 loan or greater. Well, this one that's talking about the fire and hazard insurance, it's saying that you have to do that for any type of loan, even the small loans that aren't collateralized. So you really have to go out and get an insurance policy. Everyone knows insurance policies aren't less than $2,000, $3,000 for business insurance policies. To get a $1,000 loan over 30 years? Insane. It's a tragedy. It's just a shame. Books and records. You're required to keep books and records for 5 years and 3 years. It just gets worse. It gets a lot worse. This is the loan agreement. It is, it's about 20 pages. I'm not going through the entire pages, but the core of the agreement is about 7 pages. And if you violate any of the terms of this policy, you will be in default, and the SBA may declare all the part indebted immediately due and payable. So if you don't do what they want to do, they can call the loan, what's called calling the loan, and tell you to pay it immediately upon calling. And failure to follow the obligations that you have agreed to under this policy is a waiver. Really, really tough. Oh, and then there's disbursements of the loan. I have to get to that. I mean, it does get worse. The bombshells keep coming. Disbursements may be made by and the discretion of SBA counsel. Disbursements may be made in increments. Other conditions may be imposed. Disbursements may be withheld. No disbursements will be made less than 6 months from the date of loan authorization. If you're unsure what you're supposed to use the loan for, if you're unsure how much it's going to cost to keep the loan, if you're unsure whether you really want this loan, you need to read this agreement. So here we are. If you have not signed the EIDL loan agreement, I want you to read it slowly. Presumably, you can see what I'm seeing here before signing the loan agreement. Hopefully, you can see it before you sign it. And I want you to think it through. And I want you to think about how much it costs to carry this loan, because it's going to cost you money to carry the loan. It is slightly onerous. Many of you may not want it. I can't say to you whether it's good or bad for you, but if it's a very small loan, it may not be worth your while. It is a lot of paperwork to keep track of. For those of you who did sign the loan agreement, you still can give back the money and say, I don't want it. Remember, there are terms and agreements that says you can give it back without early payment penalty. So if you're watching this video and you're now concerned about something which you have never seen before, I'm sorry, but that's the purpose of this channel. This channel is to give you the good and the bad, and today was the bad. I want you to drop your comments below if you have any, and we will answer them on Sunday's recording by 2 p.m. Pacific Standard Time if we get them, in addition to your EIDL loan questions from Thursday. As you know, this is one in a 3-part series that we're running daily. EIDL grant, for those of you still waiting for the grant, EIDL loan, for those of you trying to decide whether to have the loan, and EIDL reconsideration, that has generally reconsideration somewhere in the title or image of the story. That's for those of you who got a loan denial and want to challenge it. And please consider doing so. Watch these videos at the end. They are very helpful. Things come up, as you saw today, and stay with LA for more.